Hey traders, this is George, and I want to share with you how I drew channels today. And actually, me drawing channels helped me stay in a trade that was borderline closer to a stop. But the fact that I drew channels helped me stay in the trade. And this trade happened around 10 o'clock Central Time, and the market in Nasdaq futures was going into balance toward Globex, and Globex was 965. I took an entry right on Globex. The market rewarded me fairly quickly, dropped a little bit, came in and ran up about 80 to 80. And I was hoping to see the market run up to our target at that time of 95. So it drew down and then ran up and came back and drew down a little bit further below my original entry point. But the fact that the market was hitting a harmony zone number one, which is a very good support area, gave me confidence that I can enter here and put a stop of 8 points right under that zone and stay in the trade. And quickly the market reversed and started to move in my direction. And we ended up turning that from a potential negative stop into a positive stop. So, how did channels come into play in a way that helped me stay in the trade? The minute the market made that first retest of the middle of the range, that is the borderline of channel number two. So I'm gonna delete this and then redraw those channels, and so you could understand this a little bit quicker. So right here, came in, we go look at the bottom of that prior move into the first retest, and then look at the top end that resulted in this pullback, and that is channel number one. So that was telling me information that the market is trying to stabilize trading around Globex, and I was hoping to see a break from there. But the market did a second channel, and typically any move have two channels. So I was looking for the second channel, and this reversal candle gave us the borderline of the second channel, and we go from top to bottom from the original reversal point. So now I knew with those two entries that my stop at 939 is it. Boom. If it breaks below that, I'm done with that trade. So the market gave me a few points here, and I took one off due to the fact that the cloud was shifting. So I was like, okay, that is, and actually I went break even at that point, and the market started to move in that direction, and eventually we got a breakout of that pattern, and then the market continued to go higher and higher from that point. Okay, so the fact that I put on those two channels gave me information, and that information is you break anything under that level into this zone, that means you're giving up on this harmony zone, which is very protective zone of support, and my reasons to stay in the trade just basically went out. Okay, and this is how drawing channels give you a lot of information that keeps you away from sticky situations, and it measures and defines your risk in a way that it is easier for you as a trader to manage. And thank you for listening, and we'll see you on the next one.